I'm Danielle Hale, Chief Economist for Realtor.com, and here's what you need to know. This week's jobless claims data remained low, and reflecting the broad availability of jobs, continuing unemployment hit a low not seen since 1970. The job market favors workers, which bodes well for paychecks, but inflation is eating into the purchasing power of those higher wages. With the next Fed meeting more than a week away, several Fed speakers shared views on the economy, inflation, and the Fed's response, including Chair Powell. On Thursday, Chair Powell cemented pre-existing market expectations of a big hike by acknowledging that 50 basis points will be on the table for the May meeting. Markets now fully expect a hike that large, up from 70% odds at the start of April. In short, the Fed is going to raise rates faster than was widely expected just weeks ago. They're moving expeditiously to tame inflation that is running at lifetime highs for millennials and younger generations, and financial conditions are adjusting rapidly in response. Reflecting these changes, mortgage rates continue to climb this week, moving over 5%. For context, that's a 2 percentage point increase in less than 4 months. Combined with home prices, financing the typical priced home for sale cost an extra $560 per month, an increase of 47% over last year, or more than 5 times the overall rate of inflation. We're starting to see the impact of higher housing costs in a variety of indicators. Home purchase mortgage applications decreased this week. We saw similar weakness in existing home sales, which slipped from both last month and last year to a pace below 6 million. Still, the median existing home sales price climbed 15%. Realtor.com's weekly inventory data show that the market remains competitive, but the intensity of the frenzy is waning. Even though we saw fewer new sellers this week, total inventory didn't dip much further. Home price growth remained in double-digit territory, but slowed for a second week, and the time on market gap was also stable and much improved from earlier in the year. As the housing market continues to adjust to financial conditions, we expect to see more balance ahead. Just as buyers and sellers are navigating a shifting market, builders are observing and adapting. Builder confidence moved lower for a 4th month in April as they noted lower traffic of prospective buyers. And residential construction data was mixed. Permits and starts for single-family homes moved lower in March, while multifamily housing permits and starts moved higher. You'll find the details and our housing data for download at Realtor.com/research. And follow us on Twitter for real-time updates in this fast-moving market.